Hedge funds are often seen as the pinnacle of investment sophistication. But what lies beneath the surface? With their complex strategies and high-risk investments, hedge funds have long been shrouded in mystery. In this documentary, we'll delve into the world of hedge funds, exploring their impact on the global economy, the risks they pose to investors, and the regulatory challenges they present. The history of hedge funds dates back to the 1940s, when Alfred Winslow Jones created the first hedge fund. Since then, hedge funds have grown in size and complexity, with over $3 trillion in assets under management today. But what drives their success? And what are the risks involved? Hedge funds use a variety of strategies to generate returns, including leverage, derivatives, and short selling. These tactics can lead to massive profits, but they also increase the risk of significant losses. For example, the collapse of long-term capital management in 1998 resulted in a $4.6 billion bailout. The risks associated with hedge funds are not limited to investors. The broader economy can also be impacted by the actions of hedge funds. For instance, the 2008 financial crisis was exacerbated by the collapse of several large hedge funds. So, what can be done to regulate these powerful investment vehicles? Regulatory challenges are a major concern when it comes to hedge funds. The lack of transparency and oversight can make it difficult to monitor their activities. In recent years, there have been efforts to increase regulation, such as the Dodd-Frank Act in the United States. However, more needs to be done to ensure that hedge funds are operating in a fair and transparent manner. The role of hedge funds in market volatility is also a topic of debate. Some argue that they help to stabilize markets by providing liquidity, while others claim that they exacerbate fluctuations. For example, during the 2020 COVID-19 pandemic, hedge funds played a significant role in the stock market's rapid recovery. The impact of hedge funds on retail investors should not be underestimated. Individual investors often look to hedge funds as a way to diversify their portfolios and generate returns. However, the high minimum investment requirements and lack of transparency can make it difficult for retail investors to participate. As we look to the future of hedge funds, there are several trends and challenges that need to be addressed. The rise of alternative investments, such as cryptocurrency and private equity, is changing the landscape of the hedge fund industry. Additionally, the increasing use of artificial intelligence and machine learning is transforming the way hedge funds operate. So, what can we learn from the successes and failures of hedge funds? Firstly, it's essential to understand the risks involved and to approach these investments with caution. Secondly, regulators must continue to work towards increasing transparency and oversight. Finally, investors must be aware of the potential impact of hedge funds on the broader economy and take steps to mitigate these risks. In conclusion, the world of hedge funds is complex and often mysterious. While they can provide significant returns, the risks involved should not be ignored. By understanding the history, strategies, and regulatory challenges of hedge funds, we can better navigate the investment landscape and make informed decisions about our financial futures.